Good morning and welcome to our weekly edition of the Ashworth Weekly Market Update. We're glad that you're with us. Today is February 21st, 2023. We have just a little bit to discuss today with regards to disinflation, and I want to kind of talk about that for just a minute. More than likely, as you are listening to the news and as you're seeing things, you're hearing a little bit about the word disinflation. And I want to just define it for just a minute so that we know that we're all on the same page. So disinflation does not mean that we have a negative inflation rate. It just means that inflation is less than it was last time it was measured. So in other words, the percentage of increase is slowing in the economy or in the rate of inflation, which is exactly what the Fed is trying to do and trying to accomplish. So as we're looking at disinflation, we're looking at things that they're still growing, they're just growing at a slower pace. So let's jump in and talk about our disinflation here for just a minute. So the results came in for January with regards to inflation and a couple of things. Now this chart only deals with just retail sales and change in retail sales and the various sectors of retail sales and how they kind of came out with regards to this. But not on this chart that I want to maybe highlight just a little bit is the fact that if we were to look at the total inflation, rents and rent equivalents, in other words, housing for those that don't have their own housing, occupied a little more than 50% of the total inflation that we had in January. So as rents, one of the things that they're talking about right now is that as rents roll over, which they do, the leases are for 6 months or a year or 3 years or whatever those leases are for, as those begin to roll over, that we are going to then begin to see some of the greater disinflation in that area rather than just in some of the other sectors that we've been seeing it. And so the real estate probably is going to be in a little bit of a lag from the rest of the measurements. It doesn't mean that it doesn't happen or isn't happening yet. It just means that it's not reflected in the numbers. And so there's a lot of things that we're unpacking and kind of trying to look at and make sure that we're looking at correct numbers. But for this chart, and let's just spend a little bit of time on this chart today, what this is showing is that so the last 2 months, December and November of last year, were actually grew at a negative pace, and in January it grew at a 3% pace. Now, it was anticipated that it was going to grow just basically with the holidays and with additional spending. But the reality is that as we continue to go forward, it's showing that the consumers are still spending. The downside to this is it looks like that consumer debt is increasing, and so this can't go on forever because you can't spend your way on a credit card out of and have the same standard of living for an extended period of time. And so as we look at this and we look at the various sectors that were represented in this, you can see that autos represented a very big piece of this. Used cars probably has been the biggest piece of that. Used car prices for a period of time, the dealers were able to charge a fairly high premium and pocket the difference in that premium with regards to the used cars. And they were also getting quite a premium on new cars that they were selling. That has come down substantially, but we're still seeing that there's room for that to contract and room for that to maybe push back a little bit on prior numbers. You can see that non-store retailers was a very small portion. Interestingly, gas was a non-player. So fuel prices basically stayed even. You can see that in December and in November of last year that gas prices played a big part in the disinflationary story that we were telling. Food services also is a big player in this. You can see that that has come down quite a bit. The story on food services is that as the supply chain has opened up and that goods are becoming more available, we're seeing that come down. It's just not coming down quite as quickly as we had hoped that it would come down. And then this other one is just everything else that's kind of conglomerated into that statistic for January. And so here's kind of what we're seeing. The primary takeaway from this is that it looks like that inflation is going to be potentially a little bit more sticky than what we had originally anticipated. It probably will take a little bit longer for the disinflation to have the effect, just with the lagging of everything that's happening in the economy. It just takes time for things to wind down when that you have such heavy price increases over such an extended period of time. You can see here over these periods of time how that it just continued to grow and grow and grow. But it'll take time. The markets are still pricing in a good economy, and we're grateful for that, but it is going to be choppy. I've noticed today as that we came into the market, we had quite a downturn today, and we will continue to see those types of things where we have some really good days and some days that we don't want to look at, but that will continue probably for a while until everything evens out a little bit. So for today, the takeaway just is be patient. It'll work through. It is working through. And the economy will get back on its feet. They're actually talking about, and I'll just throw in this one more thought. Over the past year, or however long it's been, the economists have been talking about either a soft landing or a hard landing. Is the economy going to crash? Is it going to burn? Is it going to land softly, just come down just nicely and continue to grow? Are we going to have a period of stagflation? You know, all of the horror stories that we all hear on the news from various pundits and talking heads. And one of the terms that I heard today that is new to me is that we may have a no landing, which means that the economy just is what it is and it keeps doing what it's supposed to be doing, and we just go forward, and we don't have a soft landing, we don't have a hard landing. It just kind of works its way out, and so that is being talked about. That's the first time that I've heard that phrase. So for today, the word is patience. We'll get through this, and the economy will get through this, and we're so grateful that you tuned in today, and again, we'll see you next week, and thank you so much for tuning in, and we'll close for today.